Good afternoon, traders. This is Christian from Trade Trade Group, and it is Tuesday, July 6th. So first day of the week, and definitely some things to talk about today in today's video. By the way, hope everybody had a awesome 4th of July and took advantage of some of the moves today. Even though down market today, saw some decent opportunities, especially like if you're more on the growth side of investing. Those names outperformed a little bit. So we'll talk about some of these moves that happened today. Bonds as well, which I think had definitely had an impact today. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going over is for education purposes only, information purposes only. If the screen is a little bit blurry, YouTube takes a little while to render their high definition videos, so just give it some more time. So what did we get for the averages? We got the Qs were up 0.4%. SPY finished down just fractionally for the day, down about 20 basis points. Small caps, big move down today, continuation from last week where they underperformed. Also, the micro caps also underperformed. And then, as I mentioned or alluded to, bonds were strong today. So we're going to go over a couple of these charts. You're going to hear about this over and over and over, is that the bad breath of the market. So when we look at these numbers, so I'm going to go through just very quickly. I did a video, I believe it was in the beginning of last week, talking about market breadth and what it means to me. So you can review that. I take about just about 10 minutes to go, to talk about everything that's about. So I won't spend obviously that long talking about it, but I'm just going to tell you, but you have to kind of watch that video first if you don't have an understanding of what market breadth is and a couple analogies that I used. So first of all, before I get into exactly that, take a look at the Dow. There was 22 declining names versus 8 advancing names. When you look at the S&P, 351 declining names versus 154 advancing names. NASDAQ also, and this is what we saw basically a lot of last week too, because there's a lot of smaller cap names which again underperformed last week. So over 2,100 decliners, 786 advancers. So what do we do with it? So does this mean like, oh my God, the market's going to crash? Or do we just basically have a divergence on our hands? Well, I'm not going to touch the first one, because it seems like whenever there's something that goes wrong, or something that's not perfect, people automatically think that the market is going to crash or that it's going to be very severe, like a severe correction. I shouldn't say market crash, but maybe severe correction. I think it's a warning signal. I think that it's a little bit of a warning signal. This may straighten itself out in a couple days, but we certainly started to see this lean more negative last week. So yes, it's something to kind of be mindful of. And so the quick analogy with this is, if you're a stock picker, right, you want to see an expansion of breadth. It just makes it easier for you, right? The analogy that I gave in that video is if you're just picking 10 stocks randomly and you have no market edge whatsoever. So, just 10, you pick 10 stocks randomly to own, right? And you've got, bad market breadth, right? You could have 7 names that go down and 3 names that go up, right? That's bad market breadth. When market breadth is expanding, right, you're just in an easier environment. It doesn't matter what your skill level is. If you just pick 10 random names, 10 names out of hat, you want the environment that breadth is expanding, because on average, you're just going to have a better chance at winning the game. Right? But when we have something like this, it's a more difficult environment. So let's translate that into, what to do with this situation. Well, for me, again, I tell you what I do when things like this happen. I take off more positions, right? I reduce some exposure. It doesn't mean I have to go 100% into cash. Doesn't mean I have to take off all my positions, but I want to be a little bit less aggressive with adding positions. What you'll often see me do in the trading room is, if I add a new position on, I need to take something off, right? Because I'm just being cognizant of that, right? And also, as we go through some sectors, you're going to see where this comes up, right? And I think it would be it would be harder on people if this was more of a value rally, but it's not. Right now, we're seeing growth outperform. So, for example, you could look at the growth ETF was up 60 basis points today. The value was down 1%. So, depending on what groups you're in, right, it's going to be a little bit more painful, right? You could look at this relationship. This is something that you've heard me talk a lot about this year, right? Value versus growth. In this sense, I have growth in the numerator. For a lot of this year, I've been putting value in the numerator. But look at what growth is doing here. When you put growth in the numerator and value in the denominator, do you want to buy or sell that chart? To me, I can make an argument to go long this chart versus the 200 period moving average on a relative basis, right? Again, we're looking at things on it. Whenever you're plotting one name over another, or one sector or group over another, you're talking about a relative, comparison. But now that we've kind of pushed through here, you've got some outperformance there. I mentioned bonds, right? And bonds are also confirming, right? I'm a little bit in disbelief that this is happening, but it is what it is. I'm not going to argue with price, right? We know, if you're a trend trader or a trend follower or more of a technical person, you're basically just going with price. Price knows. Price is forward looking, right? So we've had this move in the bonds. I'm happy to admit whenever I'm wrong, but I didn't think that yields were going to go lower. That's what happens when the bond price goes higher, yields go lower, right? It's an inverse relationship. So this is kind of fueling the growth rally. This is fueling the growth rally. Sorry, I can't speak today. But yeah, up another 1.2%. So again, that's a big move for bonds. Now, you can make arguments about why this is happening, but at the end of the day, does it really matter, or is it our job just to make money rather than argue with this? In my opinion, my job is to make money, right, and to try to find good setups for members and point them in the direction of where there's some good setups, right, and in what areas of the market are doing well. So, what does bad when interest rates go down like this? Well, banks. What are the banks doing? The banks look pretty ugly here, right? Right when everybody kind of loaded the boat, when there's a bunch of ETF inflows all going into financials, you could see what's going on here in the XLF ETF, right? We made this big move down in the middle of June, and we kind of rallied back a little bit, but we stalled right at the 50-day moving average, which is this line right here, as well as the price, fell apart here. So, and what I do in my portfolio is, as I say, hey, I certainly don't want to be overweight financials. I could make an argument whether I don't want any exposure to the financials here until they get back over at least until they get back over the 50-day moving average, right? That's what the moving averages kind of tell me. When something is obviously this far above the 200-day moving average, the next thing that I will look at is the 50-day moving average. And if you're playing this move in the trend is telling you something right now. It could not get over its 50-day moving average. So I'm underweight this group, right? And if we look at some of the other areas that are having some issues, the industrials too, they could not retake the 50-day moving average. Same thing with materials. So what do I do with these groups? I underweight them. And I'm not, and I've reduced my exposure. A few months ago, I was overweight the materials as they were doing this, and steel names and industrials, right? Things like that. I no longer have hardly any positions, and I got stopped out in one today too. One of the last ones I was holding, which was a big move down for this thing today, down 4%, but it's failed right where it needed to turn the corner. Right, so that's it, and then you kind of move on to some other things. But those are the adjustments, and like some things where you're kind of like not sure on, you just take them off. In my opinion, that's what I'm doing. Right, when we've got a few warning signals in the market. Okay, so that's it. Like that should be it shouldn't be that complicated, right? If you think that the market is getting weaker and the internals are getting weaker, make some of those adjustments. Carry a little bit less positions, right? So that's kind of the negative of the day, right? And I can go through a few other areas too, but also I think Um, what else has why can't I type here? What else has been weak? The utilities have been weak. They actually were up today, so they had some relative strength. The consumer staples have been weak, right? Those are two also areas that I'm underweight right now. All right, let's talk about what did work well today. Software names, right? I know a lot of people love this group, the software group, right? That was up, that outperformed, up 1% for the day. Solar acted well today. That was also up a little bit over 1% for the day, right? FDN, which is your FANGs or your internet ETF, that's also going up. So again, it doesn't mean bad breath. It doesn't mean that everything is going down. It just means you don't have the whole market going up, right? And again, some people view that as a bit of a warning signal that the market is breaking down below the surface, under the hood. All right, let's talk about a couple other things. How can I not talk about this one? All right, so this was something that we talked about at the end of at the end of the week was Amazon. So this one I really capitalized on today. This we spent a lot of the weekend the member videos talking about how nice this Amazon breaking out above 35.15. Would be, right? And I've used comparisons like, this weekly chart and this value area. It's important, right? So if you're not familiar with volume at price, but this is the value area, this was the market profile for last year. When you put some significant stats around this market profile, that's where we come up with this 35.15 level. Notice how many times this has tried breaking higher out of this level, and it couldn't do it several times. You had to be patient. So now I think fun things could possibly be in store for Amazon. And right now, as I said in the weekend videos, as I said in Friday's member video too, I'm looking for a move higher into earnings, right? Or they're going to report earnings in a couple weeks. Another thing that you might see going the next couple weeks is brokers increase their price targets. They like to do that going into earnings, right? They like to outdo themselves as we get closer to earnings. So that's specifically what I'm looking for, right? It's a technical break. This thing's been going sideways for 10 months. If you're not if you are a technical person, reading the charts and so forth, if this doesn't get you excited, I don't know what does. But you got a really nice sideways pattern, and a lot of things could go right here. Now, nothing is guaranteed, nothing, so it's a little bit overbought. That would be the negative thing in the short term. But again, you look at the daily chart. We talked about 3707 is a place where this can get to. And yeah, I mean, I have a difficult time like not being excited about this, right? And there's your volume too, confirming the break higher too. So how am I playing this? Well, number one, I've got it in the TTG Trend Portfolio, right, which is our longer term trend portfolio, where I just kind of like to hold names that use call spreads for Amazon, right? So you'll notice that what I did here was a couple things, right? So I had a couple spreads in here, but I took targets in one that I have set up for next week. I also added a shorter term one, took profits in that one that was going to expire Friday. And then I took the last piece of this one off too, and then I rolled it out again, right? I like to do that when a name continues to work very well, and I think it can continue to go in the direction of where it's going. What I do is I roll that trade over and over and over. That's how you can really make a lot of money when a name breaks out. Here's another example. NVIDIA, right? This was another one that took some time. A little bit different because this did get out of value, and then it came back in. And then once it got out of value, it came back and it checked back, right? So that could also happen for Amazon too. So if you feel like you missed it, what I normally do is have something, in cases where you look and you're like, oh, geez, I missed the move, right? Well, put a small position on. Call spreads are nice for that. And then you could always add to it if it comes back and it checks back, right? This thing checked back 1, 2, 3, 4 weeks, and then it checked back right to that top of value on the weekly chart, and then it got going, right? So a similar, not exactly the same, but a similar setup, right? That happened with that weekly chart in Nvidia that is happening right now in Amazon. So again, that's what I'm looking for. I got every time I talk about Amazon on Twitter, people are like, "Oh, the stock split, the stock split." Guys, you have to move on from this stuff. Yes, stock splits are kind of fun because there is a psychological, aspect to it, right? That you could get more shares. But number one, you could go into it's different than it used to be. Like when companies used to split their stocks all the time, you didn't have you couldn't buy fractional shares. You could go into most brokerage systems and you could buy fractional shares. So it's easy for the individual investor to get access now when you couldn't do that years ago. So meaning if you don't have $3,600 to buy one share, if you only want to put in $100, they will buy Schwab or Fidelity or a bunch of other brokerage applications. They will buy you a portion of the share that is worth your $100. It doesn't really matter anymore. So, and the other thing is like if you go right, so if you make change, right, if you're at a store and you make change, right, and you get $20 back, and you let's say whatever, for whatever reason, you hand the cashier $100 bill, right, and you spend $80, and he gives you back a $20, right, your change is $20, right, and he hands you back a $20 bill. Do you get more excited if he gives you 20 singles or a 10 and 10 singles? Does that get you more excited because you have more bills? It shouldn't, right? You should be like, you should want the $20, right? It's the same thing with the stock split. It's not giving you any more value. You're just taking the same amount of shares. You get more shares and the price drops. It's the same thing with any way that you want to get change from a $20 bill. It still is $20. So it's the exact same concept. Now, again, what I said in the beginning of this conversation, there is this psychological factor if everybody seems to get excited about it. But it does not make any economic difference. All right? And if you have questions about that, you could email me. But that's what a stock split is. You could Google it too. So I don't know why so many people are like, I'm much more excited about this technical breakout than the possibility of it splitting the stock, which really doesn't matter for anybody at this point. All right, other than people who just don't understand it. Okay, so that is that. That was definitely the story of the day. I also played a little bit of Google. The other thing that goes on here, again, I think I already mentioned in this video, but these stocks love to run into earnings, right? There will be some people confused when we get to earnings because some names, they're going to come out with awesome results and the stock isn't going to go up. Why is that? Well, if it's made a huge run, then a lot of times it's buy the rumor, sell the news. Let me say that again. A lot of times with earnings, it's buy the rumor, sell the news. So that's why I'm positioning in Amazon now, and then you have the chance that it runs into earnings. It may not go anywhere from here, but you have the chance of doing it. And if it does that, if it runs huge into earnings, and even if they have awesome report, it may not go up because it'll be priced in. Sorry, I'm making sure that this is an important point because I see so many people who get so confused on earnings. They're like, well, I don't get it. They beat their expectations. Well, did you see what the stock did in the previous couple weeks? Because that is going to clue you into whether or not the stock is going to price in the earnings. Now, sometimes that's not going to be the case for every situation for going into earnings. You're going to get stocks that don't do anything, right? And then if they come out and they beat earnings, they have a higher probability of blasting off to the upside. But if they rally 20, 30% into the number, do you think it's going to be a high probability that it's going to have a further move on earnings? Or do you think it's going to be priced in if it makes that type of a move? I would be on the side if it's probably priced in, if it has a huge run the week or 2 weeks before it reports earnings. But you have to kind of look at these things a little bit forward looking. Look at your calendar. Who's going to report in the next couple weeks? Because these names are going to run, some of them, right? And there's going to be some brokers that are going to be doing this, upping their price targets, upgrading stocks, right? And that's going to be part of the catalyst of the move. All right, so that's enough about that. Let me talk about a few other names here. CrowdStrike. This was a name that I started a position last week. A lot of names, you're going to find this setup in about 10 different names, and we went through all of this in the weekend video, so I won't repeat myself. But you can look at Shopify, right? BILL is another name, right? Made a move up, consolidated, now trying to resolve higher again, right? So Twilio was another name too, right? Not as much of a move, but started to kind of make that first move. I tried some hubs today. I left it on. This is my one. I'm not sure because it did not close above value. So if it kind of sits back in here tomorrow, then I'll probably take the starter position off. PGNY was also a nice looking chart too today. This name has spent some time consolidating. Notice it did not go higher here, which I think is kind of an issue, but maybe at least this thing can get up to 64 bucks. All right, what else did I do today? Oh, Datadog was another one too, and I did take that one. I kind of forgot about this name, but it closed okay. It didn't close on the absolute highs, but if you look at this name, this is also another one of those names that Thinkorswim will cooperate here for a second. I can show you the chart, but it made another strong move, consolidated for about a week, and then has turned higher. So I like that a little bit better than a couple of the other ones I just showed you. But again, same exact pattern, right? Zscaler, same exact pattern, right? Actually, really, really nice move today, and that actually got you above 223 as well. All right, so we'll see how these things go for tomorrow. But even though we talked about market breadth and how bad that looked, it's tough not to get excited about some of these names, right, that are resolving higher after a little bit of consolidation, which is traditionally exactly what you want to see, right? You want to see a big swing up, a little bit of cool off here into the 20-day moving average, and then to resolve higher. So, I've made some adjustments, but I can't ignore the price action in some of these areas of the market. Starbucks, by the way, with another target in this one. Nice continuation here in Starbucks, right? All right, guys. I could go through a few more setups here, but video's already 22 minutes. We'll end it here. Have a great night, everybody, and see you tomorrow.